The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. This is the 29th of October. My pleasure to be here at TFNN with the Tiger Technicians Hour, 11 o'clock till noon each market day. Don't forget Steve's webinar coming up this afternoon. It's for eSignal subscribers, but at the same time, TFNN is going to be able to be part of it. Go to the front page, check it out. Should be outstanding as always. Now, let's just go straight to the market. We've got the Dow, Unch. The S&P Unch, the NASDAQ Composite Index at 4,545 is down 18. You've got gold at this particular point down $5 or $6 at 12.23. You've got silver up a tad, up 9 cents at 17.23. You've got high-grade copper at 3.10. You've got bonds, and this is going to be very interesting by the end of the day. You've got bonds down 10-30 seconds at 141 and 730 seconds. Let's see what the Fed does to bonds. Now, I'm suspecting, based on what I've done, the study that I've done, showed my subscribers to my opening call with my triple yield chart, that we're in a trading range in the yields, and that's the way we're going to have to look at it. Question of the den, we're going over bonds today. All right, we'll go over bonds today. I don't think there's all that much to do, but we'll do it. We'll do it right now. Bonds at this particular point, the TLT, let me just give you the continuous contract of bonds. So you had that incredible spike up to a peak, alternate count COD, but it went right to 148 round number. Oh, I forgot about that. The round number high in the continuous contract, that doesn't really count. You want real contracts for round numbers. On the 15th, that was the exact low of the market and the exact high in both the VIX index and in bonds. What we've done is we've made the potential for an Eiffel Tower. When you take time, let me show you something. This is, you know, I'm all about chart patterns that I've discovered, that I've worked on for years and years and years. So I tend to think that patterns repeat. It's human nature. They repeat over and over again. And if you can find something that has a matrix, and let me rather call it a fractal, a pattern that gets repeated over and over again, depending what time frame, what size, it doesn't matter because it's the same design. I tend to look at it and say, okay, you've repeated over and over, and in this particular instance, you've got in the continuous contract a G, C, I'm going to call it a preference with a G right now in the monthly chart, in the weekly chart as well, but it is a D in the monthly chart, and that to me is really important. Why? Because in the Chapman wave methodology, you try to identify the most obvious lowest low bar. In this case, it's the low that was made back on September of 2013 in the continuous contract. That's at 123 and 730 seconds. That's the continuous contract is, how can I put it? I use it as a benchmark of pattern recognition. I use it as a reference point. But if I'm trading, I will use the root or the kernel. The specificity is absolutely important. So you want to be trading either the TLT or the nearest futures contract, the December contract in this particular case. If you were trading, but as a template, as a format, the prices might change, and yes, it gets smoothed out. But basically, I have everything at my fingertips when I'm looking at continuous contracts. It's just as I say, sometimes prices are different, sometimes because it's smoothed out, there'll be a little difference, not much, but just a little difference in the pattern, but mostly it will be the exact same reference point, but you want to be trading the exact contract for the exact price. So in this particular instance, I was looking for a new all-time high in bonds, possibly. And if it did occur, it would be in leg D. That's exactly what's happened in both cases. We've gone above the high that was made back in July of 2012 in bonds. And what's happened is we've come back down, and 136.5 is the 9-period exponential moving average support. But once you've gotten to D, you've got to be very careful at looking at your technicals. In this case, the stochastic is good at 85.71% in the monthly chart. And the MACD is rising, but it isn't the same as it was back in that last half of the year of 2012, where the fast-moving average was expanding beautifully as the slow-moving average, that red line, was moving higher. In this case, yes, they both are, but the difference, the differential between the two is kind of narrow. And that puts a limit to the upside, which we've just seen. So I'm anticipating, wow, I wonder if I can do this daily monthly. I'm going to get out of this here, and I'm going to do this question in the den about bonds. I think it's a good time to be looking at bonds in closer detail. So we'll close this, and I'm coming back to this workspace right here, my long-term workspace, where I show the triple yield chart. And I made a rather comprehensive report to my subscribers. I think it was yesterday, maybe Monday. And this particular instance, let me open this up so that you can see what I'm looking at here. Look at this. The triple yield chart, 30-year is the white line, the TYX. The TNX is the 10-year, and the FVX, and that's kind of the goldy brown color, and the cyan light blue is 5-year T-notes. So the T-notes, 10-year and 5-year, are right there. They made significant lows 3 weeks ago. 3 weeks, but it isn't 21 days, 15 days. It was that Friday, Thursday, Friday. So now what we're looking at is the low of 26.76. We're now up at 30.87. When you put this in the context, this is a weekly chart of where we are. Right now, we're exactly where we've been many times before, back in 2013, back in 2012. But until the low that was made in 2011 at 26.94, we hadn't really been there. We were up at the higher levels, going all the way back to 2009 when we broke out to the upside. So there's this white dashed line across there. So I wanted to show that. I wanted to show also that there was a period where there was a cluster at the top at 5.4% back in June of 2007. And then we expanded and expanded and expanded. We went down to the low of 5.41. That was made in 2012 in the 5-year, 13.94 in the 10-year, and 24.52 in July of 2012 in the 30-year. Then we had two buy modes, went to a peak a G top, unusual, at 39.74. Those are big percentage differences, but in fact, in range, historically, we're just stuck in a very narrow range, historically, that is. Now there's something else that's happening. The low that was made, that climactic low, says that there could be a rally, and that rally should stick us still within the trading range, and that this move at this particular point should not exceed 33.91 in the 30-year T-bond yield. And that was the high of the week of the 19th of September. Now, what's going to be very interesting is that if we go and we make an arch formation and we stall somewhere in the 3.1 area and then come back down, if that reversal down takes out the low of last week of 29.35, we're going to be making an arch formation, and that rectangle formation will be the trading band between, I'd say, between 27.50, 2.75, and on the upside, 3.110-ish, something like that. So this is going to be a very important period on a shorter intermediate term basis on the yields. A break above I want to get this exactly right, 3.391, the high of the week of the 19th of September in the 30-year yield, since bonds are going much lower, they're going to break that major monthly support. They could break that monthly support, and yields will be going much higher. So I hope that kind of clarifies what I'm looking at. Basically, if I had to do anything right now, I just grab my chart pattern and I draw a rectangle between that level right there. Let's see if that says, let me make that black. Fill pattern color. Let's make it blue. Yeah. So let's see if that's not going to work out either. But anyway, I'll keep it for the moment. And that's kind of the range. So that could take you to maybe on the upside 3.2. Okay? So that's what I'm looking at. So now let's go back to a couple of other things that I wanted to talk about. For my opening call subscribers, what I had said was, I do this chart every single day. I've done a Dow analysis for 25, maybe 30 years or more. Every single day that I've been around to be able to do it. That's why I do the Dow, because I believe very strongly that where the Dow goes, the general market's going to go. Yes, it's only 30 stocks. They're industrial stocks. These are the most important stocks. So they are really important. And then obviously the S&P 500 is the elephant in the room because it is so big. But the real test is how does the relationship, the 3-month relationship between major turns in the market that sometimes happens where you remember it was December 31st that the Dow made a top and didn't make a new high, and then the other indices went to higher highs. So sometimes that can happen January of 2000 and March of 2000. Instances where the Dow topped out early, and then came the NASDAQ and the S&P. Let's go to Travis in St. Louis. Travis, how are you?
I'm doing great. How are you this morning?
I'm well, thank you.
Long time no chat.
Yes, I'm looking forward to hearing the question.
Yeah, my question is on Clovis Oncology.
Yes.
I actually emailed you about this probably back in June or July sometime.
I remember that.
Okay.
And June and July, and now I can't remember. I think I'd given parameters that it needed to break out of June, July. Yes, and then it just took off in August.
Yeah, they've got some trial information that's going to be released, I believe, next month on their big drug. So fundamentally, I love the story. I love the company. I love the drug potential here, and I'm in it for the longer term. But I bought several shares in the 40s and in the upper 30s, and so I'm kind of wanting to take a little bit off as it rises ahead of this data. But you know how those work, and of course they can explode in your face if you're not careful. So,
Travis, can you just remind me again what did you say? When were the trial
I think it's
results?
I think it's coming out in the next couple of weeks. Is kind of the rumored dates. I don't know the exact date when it'll come out, but that's been. I don't know whether it'll be around the earnings report on November the 6th, I believe.
Okay, so then can you hold on through the break?
Yeah.
Okay, great. Folks, we're looking at Clovis Oncology Inc. trading at 57.66 down at $1.39 CLVS. We'll be right back. Travis, this is a good-looking chart, and we'll talk about it when we get back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. We're back. Dow's up 3, S&P's up 25 cents, and we've got a great stock we're looking at. Just CLPS, Clovis Oncology, that Travis has been accumulating over a period of time. And now the big question is, well, it's really not a big question. It's just a question that could have a big result, because you've got at least 3, maybe 5 weeks to go before anything. Sometimes these rumors come out, or sometimes there's an early release of information. But generally, when they expect a result to come out, that's kind of when it comes out. And what we're looking at here is that in this big scheme of things, Clovis has made a peak C in the monthly chart from its IPO, which was back in 2011. I think it was November. Yep, November, had a low of 12.29, round number 14 high. Then it pulls back, and then it starts its big move. And the move has gone to a peak C at 93.33. It's pulled back to the 35 area, and it started another move up. So that peak C, invariably with IPOs, at some point you will get a D. I couldn't tell you how many, not hundreds, but thousands of times that's happened. But sometimes they do fail, especially when you get biotechs, because biotechs are in the most risky area of all, because I mentioned this before. I have a friend who I haven't seen for quite a while, but he's a physician, but what he has done for a long time, I mean, he was part of the FDA, I think it was, for a period, is to do the research, to look at the papers that are presented for companies that are hoping to have an approval. And his contention was that he could not believe how many companies, billion-dollar companies, would set forth their production. They would go through the whole thing, spending literally tens and tens of millions of dollars, and yet if they had just worded their paper correctly for the same effort that they were doing, they had to word it correctly to be able to be approved, they would have passed, and yet they failed for the simple reason that the statement that they made was not what was being read as the result that was being sought for. So you never know with these things. Now, I'm going to suggest two things. One is, you've been very steadily accumulating. I don't want to be the guy that says to you, get out, just on a whim or on a technical aspect. The stochastics at 96% in the daily. The MACD is expanding. Everything about it is looking great. It's in a leg C. Some of these legs that have started from the low of the 15th of October turn out, as the IBB is, in what I have to think of this as a leg A, although everything about it says to me it's more like the end of a move than the beginning of a move, but the stochastic and MACD at 98%, and this is just great. And your Clovis is doing exactly the same thing. So here's my recommendation. I wouldn't be adding to the position, but if it crosses in leg D above 59.92, then one part of the position, I would say, I wouldn't even call it a stop, but I would say that if it pulled back between 54 and 52, I'd be a little bit careful, because the 200-period moving average is at 49.83. So that's the daily. The weekly is suggesting that the 49.51 9-period exponential moving average is an area that will be tested at some point, but it doesn't say when. And the monthly chart is saying 51.30 is the support to watch. So if I put the whole thing together, here's my recommendation. Don't keep your eye out for any aberrations. I'd be watching the IBB, that's the biotech index. If the IBB, which is trading right now at 291, so let me just give it to you better. I'll give it to you right directly. Starts to pull back and goes between 283 to 279. That's comparable to the same levels that I spoke of in Clovis. If it pulls back and closes under 275 in the next 3 weeks, I would say to you, then be a little bit careful. I'd start to take a little bit off of the Clovis. But in a sense, it's independent of the IBB. It's trading right now very much like, it isn't at all-time highs, but it's trading kind of with the trend of the biotechs. And the question in the den is, Basil, please ask the caller if there's any reason why 25% short interest on Clovis and could be short against some convertible notes they floated. So I'm not sure you're going to be able to answer the question, because this is kind of complex when it comes to heavily shorted. But the heavily short position is giving you a cushion, at least for now. So let's speak again in about a week. Let's look at it, but I would not be doing anything unless it went to the 54, 52 area with the IBB pulling back sharply. Then I'd say, hey, watch this closely. But so far, it looks great. Congratulations. Thank you, Travis.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation vision has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Just got some emails that I'll also get to, and I've got questions in the den. But first, I want to go to Scott in Safety Harbor. Scott, how are you?
How have you been, Basil?
I've been very well, thank you. So you'd like to look at...
Well, you know, there's so many things. We made so much money, you and I, on Apple before, and the calls on BAC. But I'm very curious about why Bank America isn't moving now. I don't have a position in anything. I would be just questioned as my credibility if I told you how much I made on Gilead. But so let's just talk about BAC and what the charts are holding for us.
This is a very good point in which to bring up the financials, because I mentioned that for my subscribers this morning. There's a particular stock that I would like to get into. Didn't want to rush into it today, but I'm looking at it in the financial sector, as well as the XLF, which is the S&P Select Financial ETF. And what we're looking at right now is Bank of America, trading at 16.80. BAC is the symbol. It's in leg C up in the Chapman wave. It went to the 200-period exponential moving average at 1584, dived a little below to 1543 on the 15th. Was that the 15th? Yep, 15th. And now it's in leg C. It's a V-shaped move that's taken time I like the V-shaped moves that go straight down and straight up. So when it takes time to the right side, it means that it's beginning to stall, and you've got to be a little careful in case there's an arch formation that forms, and that arch formation would look like this for anyone looking at my charts on Tiger TV. But I suspect there is going to be a leg D, and I suspect that in the weekly chart, the U-shaped pattern that went from 18.03 down to the 13 point, what was that? 13 point, no, that was the 1438 low back in the week of the 23rd of May. Should have a smaller U-shaped pattern, and there should be an attempt, at least in Bank of America, to try for the 1741 area. Now, in the monthly chart, I've got a U-shaped pattern, and this U-shaped pattern is one that I'm going to keep watching really closely because it has the potential, if it doesn't break out significantly above the previous high, it has the potential to become that double top pattern, and it could just squeak slightly above the 1803 level. And in the monthly chart, if in November, December it starts to hit that level and then pull back and break underneath 1550, I've got to say, uh-oh, Bank of America could be at least in the intermediate term in trouble. If it holds above, not only will it be a big positive for the XLF, but it's going to be a big positive for the general market in the sense that it's going to be saying that the financials are still holding well. Now, on a short
Well, that's what the strange thing is because the XLF is usually shows the leadership and everything else follows. But in this case, we have good everything else basically except oil, and the XLF is not reacting. So I think you're correct in your call on the $18, and it seems to bang into these solid numbers like it did to the 16 and the 17 and 15 before that. It kind of knocks on that door of that upper number and then breaks through it, and then it usually just boom, it goes to the top level of, it's banging on 16, and boom, it went up to 1670 something, and that's the way it reacts. And I mean, it just doesn't make a lot of sense, but that's what it does.
I'm going to make a suggestion. Yeah, you said that you've just stepped aside. I think that that's good for right now. What I'd say to my subscribers on Tuesday, was it Tuesday? Yeah, with the doji candle. No, that must have been Monday. On the 27th, I said at the close, for the next day, that this particular candle, I have a whole thesis about just a very few number of Japanese candlesticks. One is on the doji pattern, another is on the very solid long candle. But in this particular instance, what I said is I'm anticipating that if there's a close above the high of Monday, which was in the Dow 16,836, that we should see a move to the upside the following session, that is not just on the Tuesday but on the Wednesday, but that we will probably close down. Also with the very solid candle, there's a good chance very often after the solid candle, you can see what happened exactly on the 22nd of October. There is a move to the downside to at least give back some of those gains. So that's what I'm anticipating here.
Well, with the Fed coming out, I think the upside is probably the call on it.
Yeah, I think there'll be a pullback, and then I think the upside. So I'm giving it a couple of days of digestion. You know, this has been a spectacular move off the October 15th low, as you've noted. Now, the Bank of America is really the issue here. 1662 should be very good support. I'm suspecting that it pulls back a little bit, that maybe it takes out today's low of 1671. It gets into that 1660s. If that holds and the general market starts to move higher, I'm suspecting that Bank of America has a move to the 17 area, and then we've got to watch
about
it.
1725, and I think the charts will show that correct. But it's the most unlike player on the team. But at this point, this unlike player has been doing very well. He's got all his problems taken care of. He's been in the gym, and it's finally the other guys on the team just got to say, hey, you know what? You're okay.
Yeah, and now let me give you the trend line resistance that I'd be looking at for it. 17, yep, right in that 1715 to 1722 area. Now, two things are very important about it. The 200-period exponential moving average it has been like a magnet to the upside. It's also going to be a magnet to the downside. So I'm suspecting that it pops up a little bit, but it's going to keep coming back to 1684, and that the 1680s is going to be where it needs to build support so that it can really spring, and we'll see how it handles the 1720s. If it's able to snap through that, that's going to be very important for both Bank of America and the XLF. So why don't we speak again? What's today? Today's Tuesday, maybe about Thursday, Friday. We can look at this.
I'll probably get into it today, but I'm not going to stay long. I'm going to go with what you're saying and get out even before it gets to 720. I'll probably get out at the 1710 area as it
on the way
goes
up.
to that.
Yes. Good. So,
I
hey,
think that it's the problem
congratulations.
we talked about before when people sit around waiting for that dollar. It's just that's the way you get in trouble. So.
And that's right. So the same thing you've done very nicely as well with the biotech stocks, and you've handled this the other ones also very well. Hey, thanks for calling, Scott. We're going to be looking.
Thank you very much, and keep your eye on Gilead. It's a money maker.
It has been, and right now Gilead is holding well after an earnings report. I think it was today or something. Pulled back
when
and
we had
Armageddon
down. two weeks ago in Ebola, I just laughed, and I said, my wife said, "Why are you laughing?" I said, "Please, I mean, this is the time to go shopping." And I bought Apple, Gilead, and everything, and then Gilead, of course, ended up going up $12 in
all-time
3 days.
high.
So.
Congratulations, Scott. Fabulous move. Hey, call again. I'd love to hear from you. That's Scott in Safety Harbor.
Thank you
now
very
let's go
much.
through a couple of the aspects that we were talking about before. So one is I just wanted to finish up on the bonds. I want you to look. The TLT has had a very sharp move. That's the Eiffel Tower move, but it's taken time, and it's saying to me that unless there's a sudden move to the downside and 118 support, I'm going to say 118.10 to 117.85, somewhere in that area. And probably I mustn't ignore the candle. Yeah, 117.36 is the candle of the 6, that doji candle. That has to be very strong support. And if it breaks, you're looking at yields starting to move higher, and then we're going to see how the market handles it. So I'm going to go to our next caller. We've got Matt in Rhinelander. Hey, Matt, how do you pronounce that? Wisconsin. Rhinelander?
Rhinelander.
Okay, good. So, hi, welcome. And you'd like to look at?
You know, I guess today I'd like to take a look at Silver Standard Resources as well as First Majestic Silver.
So let me just write that down. That's SSRI. And what was the other one?
AG.
AG. Okay.
Yeah.
So here we go. SSRI trading at 531, down 26 cents. You know, that monthly chart is like gold, and the weekly chart is the same kind of pattern. Makes the H, the lowercase h that goes to the lowercase m. Boy, these stocks, if they don't make a turn to the upside, and they have to make that turn to the upside, I would have to say within the next 2 to 3 sessions. In other words, SSRI must not take out the low of 511. Do you have a position? That's really my question.
I don't, and I've been watching these two for quite some time, and I know that they're very beat up, and
Silver Standard Resources.
Yeah, thinking about taking a position in them.
Okay, can I make a suggestion? So you don't have to do it exactly to the penny, but this is what I would prefer, to be buying on strength rather than buying on the way down. We used to have Goofy Golfer used to be in the den, in the Tiger's den, and he used to always chuckle and talk about the gloves, the metal-clad gloves that he used to hand out to people when they were buying on the way down, because it's like a falling knife. The price just goes right through. So I'm going to make the suggestion. You can handle it any way you want, but I would rather, and I don't even think this is going to work, but it's the only way I would trade this. I would rather buy strength. It's at 531. I'd rather buy it at 547 to 553 on the way up, so that the 120-minute chart is starting to improve rather than saying, if it falls from here, it could very easily test the recent low of 511. So I'm going to make the suggestion that you just start a very small position on the way up at about 546, 547, and you put in a pretty tight stop. Why? Because if it pulls back again and it takes out anywhere around the 526 support, boy, that last low of 511 could be taken out very quickly, even though it's getting to a point where I agree with you. This is the area that I'd be looking at it as a potential buy, but it would be a nibble and then add to on strength. And here's the reason why I'd rather buy on strength, because the MACD is good, but the price hasn't gone up. That means if the MACD starts to fail, this thing can go even lower. Stochastics at 24%, giving a little bit of a positive divergence, and that's the reason why everything will start to strengthen if I can see some strength. But silver, use the SLV as a good benchmark. Silver is holding okay. If the SLV goes from 1657, if your stock is going to move higher, my suspicion is that the SLV will try to take out 1664. If it takes out 1664, you can start that position, and you can add a little bit on the way up. Don't get carried away. I don't think this is going to be a big move for silver, even if it does pop up a little bit. Not just yet. I think we have a little more time to go before gold and silver get to a point where they are extremely oversold, and they're going to have a good, not short-term bounce, but an intermediate-term rally. So take it for what it's worth, but that's kind of my thinking right now.
I think it's great advice, and I sincerely appreciate your time.
I appreciate you calling, and call again, and let's look at it again. Maybe in a week, let's look at it again. Okay, Matt?
You got it.
Thank you very much for calling. Let's go to Robert in Paramus, New Jersey. Robert, how are you?
I'm good. How are you, Basil?
I'm well, thank you.
A question about Marriott International.
Yes.
Last time it was at this level, you said to short it, and I was wondering if you recommend that or if you would wait because the market's too strong.
Okay, so folks, we're looking at Marriott, MAR as a symbol, trading at 73.64, up $1.69. We shorted it almost within a point or so of the very top, and we were able to make really good money on the way down, and we got out in the 64 area. I haven't got it written down. I should have written it down. But we got over an 8-point gain in one half position and a nice gain in the other. Then I should have switched immediately to the upside because it's a great company and it hit the 200-period exponential moving average. The daily chart went to 59.61. That level was at the time round about 60.70, and it shot up, and now it's gone to all-time highs. And I've got this as leg B in the daily, and this gives me an opportunity to talk about a number of things, and maybe I can actually answer a couple of questions at the same time of questions that I had. Because this is at a new high, having gone to a lower low, it means that I have no choice but to call this blue B. In other words, this is not gray B underneath the previous high, the Grand Canyon cliff that it has to climb above. It's at all-time highs. So I suspect, just like the IBB, which is in leg A, just as the QQQ, which has failed to make a new all-time high at 100.57, but is so close to doing that, it seems to me that I have to put all my biases aside and say that at this particular point, not the weekly charts, but the daily charts are saying we've got another week to go of upside activity before we get a sell signal in the daily charts, and then we're going to have to assess whether or not this is the kind of short that has the momentum to be very serious, or whether we've done something different with that volatility index having gone to 31. So I'm going to try to answer the question during the break. It'll give me an opportunity just to update the 120-minute chart. We're on with Robert in Paramus, New Jersey. I have a bunch of questions I hope to also get to. I'll be right back after.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks. Stay tuned for Larry. Let me just get to Robert right now. We want to go back to Marriott, MAR as a symbol. So, Robert, my answer is no, not a short. Number one, it might be on the 120-minute chart, I'd say you got yourself a quick a point and a quarter. I would not be doing that. But I will say something. On the upside, I would look to buy Marriott on a pullback it's at 73.41, between 72.35 and 71.62, somewhere in that area. You could nibble on the long side. I'd have a point stop. I mean, a point stop is just very, very tight. 1 point stop, maybe 1.10 stop. And then I'm expecting leg C and then leg D. So I'm suspecting that it could go to the 76.80 to 77.80 area. We'll see. I might be wrong, but that's the way I'm looking at it right now. I would not be shorting. I'd be looking to buy. And when I get to that leg D, that's when I'll do the assessment on whether to short. Hope that helps you.
That helps a lot. Thanks very much.
Thank you very much and for calling. I always appreciate it. Robert in Paramus, New Jersey. Okay, question. How do you interpret price of the S&P off the FOMC meeting a day after as an indicator? You know what? I've stated this for the 11 years I've been here, that any Fed meeting, it used to be M1, then it was M2, then it was M3. Now they don't even have M3 anymore. But that used to be on Thursdays. Whatever it is, cannot change a trend. It has once or twice over all the years. Most of the time you're in the trend, and the Fed will only exacerbate that move either up or down. So it doesn't change the trend, and I don't see a trend change right now. So whatever the Fed does, I don't think it's going to make any difference within 2 days. So let's just get that one out the way. So Sarah has a question. Didn't understand the 5, 10, 30-year bond chart. You know what? Let's see what happens at the end of the day. My feeling is we're in a range. We're just in a kind of a tight range. And in fact, if there's a positive aspect here, then the TLT, instead of pulling back, could test 119.80, the 9-period exponential moving average. If the TLT closes above, because the 120-minute chart is at a low right now, so if it closes above 119.40, it could test 119.80. If it closes above 120.20, this is the TLT, in the next 2-3 days, that's just going to say, hey, money is still going into bonds. So that's the way I'm looking at it right now. And if it closes under 118 to 117.80, I say, okay, watch out. The yields are going to go a little higher, but only a little higher. Now, I had a question I mentioned on Tom when I was interviewed by Tom yesterday, that for Facebook, we had taken out profits before the last 15 minutes of the session, and then I had raised the stop considerably. Why? Because there's a particular pattern that I've developed over the years called the Chapman wave flat base restart. But then there's something called the unconventional flat base restart. And if you look at this, I'd put that in right there. I'd say flat base restart, and we should test 78.01. Look what happened. Facebook went to peak D and plummeted. It went down to a low today of 74.78, trading at 75.83. I'll get more into that a little bit tomorrow, because I had a couple of questions about it, or maybe Friday during Technical Friday, but that's one of the techniques that I've used. That's why we got out of Facebook with a very nice profit, and lucky. Now, the IBB, I got a question there. I don't know if I can get to it. I want to just do this before we wrap up for the day, because there's the Fed meeting. If the VIX index starts to rally, it's already running from the 200-period moving average at 1536. If the VIX goes to 1550 or higher, this market will pull back. You'll see the Dow down 35 points, the S&P down maybe 5 points, 4 points by the end of the day. If nothing much happens, I think the upside is limited just for the next day or two. We need to do some consolidation. Then the question was, surely there's a bubble going on in the biotech sector, and I'm going to answer this by saying we are getting to bubble territory in the IBB. When it collapses, it's going to be a whopper, but right now, it's acting very well. It should still go higher. Hey, thanks for being here. Stay tuned for Larry, and I will be back tomorrow. Have a great day.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.